Hi everybody, this is Alex Deploy from Expert Forex, and in this video I'm going to be reviewing the Forex double in a day trades for the week ended the 4th of October. So let's have a look at what the 4th of October week produced. It produced 53 successful double in a day trades. You can have a look at this table for a deeper analysis of those particular trades. Then if we look at the 9 weeks that we've been recording these weekly trades, we can see that there have been over 280 successful trades. The most successful currency has been the pound yen. And then we're looking at the pound being the second most successful one, and then the euro yen being the third. If you just traded those three currencies, you'd most probably have caught over 70% of the successful double in a day trade. So this table is quite useful. So let's move on to some more detail about today's or this week's trading. In this week's analysis, what I've done is I've actually put our RSI channel trading technique on the charts, and I've overlaid that with the successful trades or the non-successful trades to see how much of an overlap there is and how good this particular technique is at finding double in a day trades. So just to remind you, if you do want to view this technique, please, I have put in the links on the web page. You can go to those links. I'd suggest you overview this technique before looking at this particular review, and you'll understand why the signals take place where they do. But it's a pretty simple technique. Essentially, it says when the candle or the price touches the upper channel line like it does there, and the RSI is over then that's the right time to start trading. If it touches the line and it isn't overbought, don't trade. As simple as that, and the same thing for sales. You also adapt the settings on the RSI and on the envelope for downward or upward trends, which I've done right here, and you can see how I've done that in the videos mentioned previously. So let's quickly run through this particular analysis. This is based on 130 pip trend. So we used the pound to go for 130 pip trend, and used the envelope technique on that basis. So here we go. Let's see. So at the start of the week, there was a touch of the upper envelope. It did qualify. The RSI was over, went into that trade, and it got stopped out. Boom. Nice start to the day. Then the next time it touched the upper envelope, yes, it was overbought, so that was good. Went into that deal, was quite successful in that it got topped out, topped up once, topped up twice, and then topped up 3 times. So it's been topped up 3 times, and it almost reached the target. There you can see there's the target line, then reversed, went back and hit the break-even stop. It's not really a break-even, so it's small. You make a small profit when you hit that stop. So that was stopped out. So far we started with a stop out and a break-even stop out. So not that great start to the week. Then the next one, here we are. Here we have a touch of the upper line. We look down and we see, yes, it is overbought. Boom, we went in. Again, initial trade, first top up, second top up, didn't quite make it to the third top up, and then it reversed slowly, and we were stopped out right there at break even. Then the next opportunity, here's an overbought situation. There it's touching the envelope at the top of the envelope, and there we go into the trade. There's the initial trade. There's the first top up. There's the second top up, there's the third top up, and boom, boom, it hits the target. So just remember, with these trades, you're making roughly 20 times your initial stop when you have a successful trade. So we might have lost $200 on that trade, broken even on that trade, broken even on that trade, and now all of a sudden we make $4,000 in one trade. So we make up our losses very, very quickly. Also, as you can see, this system allows you to only enter very selective trades, so we're not losing as many trades as we would normally. Okay, so we go on and there are no further trades. Remember, we're on a downtrend, so I'm not even looking at taking buy transactions. Here is, however, a trade that was successful, obviously not using this particular technique, and it did touch the upper envelope line, but it wasn't in an overbought. So normally you wouldn't take that trade, but this trade was successful. There's the initial trade, there's the successful top up, the third second successful top up, and third successful top up, and then boom boom, it hit the target. So this currency recorded 2 successful trades overall. Only one of those were based on the envelope system, but as you can see, your return on risk has been fantastic in this particular case. Also, you might have noticed that using the envelope technique, you virtually don't need a stop. Look where you're entering. You're entering at places where there's almost no stop required. So it's also a great technique for that kind of thing. Even that one, which wasn't one, touched the envelope line and there was virtually no stop required. So that's why this technique is actually so great for double in a day trades. So let's move on to the next group of trades. Those are the ones. All right, so this is the 100 pip movement group. Here we have, and I'm not 100% sure which currency this is, but the 100 pip is in fact the pound yen. So we're looking at the pound yen on the 100 pip move. Here it is, and again we're looking at the envelope system. There's a qualifying trade. As you can see, it was entered but stopped out. Then the next one, qualified, entered, stopped out. Next one touched the upper envelope but didn't qualify because it wasn't overbought. It was, however, part of a diversion or diversion. So we still wouldn't have entered that, but this particular trade was successful. There's the initial entry, there's the top up, there's the second top up, there's the third top up, and boom boom, it was successful. That was 100% return. Then the next one, again, we wouldn't have taken it. It did touch the upper envelope, initial, first top up, second top up, third top up, and boom, there was the success. Just showing you how the envelope system compares to successful deals that took place. You can see that it doesn't catch all the deals, and maybe that's not the end of the world if you miss a deal here and there, but what it does catch is it catches some really a lot, I would say, safer deals. Then there was another deal that was caught here, which was this particular one. Again, we wouldn't have gone into a sell given that low level of the RSI, but here it is, initial top up, top up, top up, and boom, there you have a successful double in a day trade. Then the opposite happened. It actually moved up. Remember, this particular one is in a downtrend, so we're not actually taking buy transactions, but this was a successful buy transaction. There's the initial entry, top up, top up, top up, and there it cashes in positively. So here is a valid entry. We have it touching the line. We have an overbought environment. We go into it, and there you can see it actually gets stopped out, unfortunately. Same thing happens again. It goes up, qualifies as an entry. There it is. We go into that particular one, and that one is in fact successful because you have your initial entry, then you have a top up, and you have a second top up. So this is actually going in the right direction all the way, but then it does reverse, and we get stopped out at break even. So in this particular case, the envelope system has not really produced a successful trade, but it also hasn't broken our account. We've basically broken even, and broken even on all of those trades, and we've missed a few double in a day trades, which was a pity, but again, you've got to decide what level of risk you want to take. Then let's look at the next group of traders, of trades, which is the group that they are going for 85 pip runs, and here I have selected, I think it's not the euro, it's the Oz. This I think is the Oz. We can check up at a later stage, or I have already shown you the table that's got the yellow Oz colored in. So what I've done is I've identified the trades again. Here's a trade. There are a couple of trades there. I haven't gone into the detail as that I would have gone into on the previous charts, but here are the successful ones that took place. That red arrow shows a successful, that's a successful, and that's a successful. So let's go from this one. There was the initial top up, and here you have your successful deal. We would not have entered that because look at the RSI position, so we wouldn't have caught that one. This one too, exactly the same thing. It wasn't in an oversold. This has to be in an oversold environment for you to take it, but that was a successful one where there's our initial one, there's the top up, second top up, and cash in there. Then here's one that we most probably could have caught with the RSI. Maybe if we were a little bit more lax with but here is the initial trade, first top up, second top up, and then the successful cash in there. So there's a potential one. Not 100% sure if we would have taken it. It wasn't quite as overboard as it should have been, but there was a potential one that we could have caught. And here's one that definitely qualified. It went overboard. It went overboard. It touched the envelope, and in fact it would have we would have got stopped out because it didn't quite reach the target area, came back and stopped us out. And then there's another trade there that I've recorded just for interest sake, which was stopped out. There's the entry, there's the first top up, there's the second top up. Didn't get to the target up there and got stopped up to break even. So again, showing you that the risk on these transactions are not that high, because you also have a good chance of being stopped out at a small gain or at break even at worst. Here's another one that got entered. That's a buy, top up, and then unfortunately it came back and got stopped out at break even. And here I see a successful trade here. There's the entry. I think the first top up was over there, second top up over there, and it was a successful trade. Again, we would not have entered it with the RSI system, although the envelope was definitely touched. It didn't qualify. Okay, so let's move on to the next group, which is the 70 pip group. And here we are, and I think the group here is most probably the euro. Yeah, it looks like the euro from the currencies. Again, let's have a look at the opportunities presented by the RSI system. The euro is trading down, so we're only looking at sell transactions, and there is a sell potential sell transaction. This one would have been stopped out at break even. The entry would have been there, and the stop and the break-even transaction would have occurred there. This one, again, there was a series of it didn't touch the envelope until here where it definitely was oversold. Again, you can see there that this would have resulted in a break-even, because it would have gone up and down and stopped our transaction out. Then here is a definite transaction. It is overbought. Oh, that's nice. It is overbought, and there's the entry, the initial entry. There's the first top up, there's the second top up, and boom, there's the successful deal. So this was a successful deal. It's just a bit of an enlargement. And then there was another successful deal which we definitely would have caught with this technique, which is initial entry, top up there, and a successful cash in there. So you can see that there are a lot of double in a day transactions. They are not all caught by this envelope system, but certainly does give you an extremely good chance of having a high probability trade, and that's all we're looking for. You can never get a 100% guaranteed. All we're looking for are high probability trades. So I hope you found analysis video interesting and that has given you some food for thought. It certainly looks like the envelope system works a little bit better on longer runs than on shorter runs. That's my initial view of what we've looked at today, and yeah, I'd say that's most probably what's coming out of this. Also, don't be scared to use it, because you get a lot of break-even stop-outs if you get it wrong. So again, you know, the double-a-day technique is very much related to a doctor. Both the technique and a doctor need patience to succeed, and that's the way you should view it. You can see there are a lot of break-even stop out, so you need a lot of patience. But when you do get the successful transaction where you're doubling your account in one trade, it makes up for all of those frustrating stop outs. Again, from me, Alex Deploy, thank you for watching this video, and cheerio.